Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with Asian equities. They kicked off the trading week on a positive note. After, of course, weak US unemployment report on Friday cooled expectations that the Federal Reserve will start raising interest rates soon. Markets in China, of course, remained closed until Wednesday for National Day holidays, with China closed for the holiday. There will be no direction for Asia for at least a couple of more days. But the conclusion, however, from the US non-farm payrolls is that China's slowdown is spreading across the Pacific. This will only add to expectations that the People's Bank of China or central government will move monetary policy this year, as well as we're looking at Japan's Nikkei 225 index. It jumped 1.6% to a more than 2-week high, above the key 18K mark. Rebounding, of course, after posting a 1% loss for the week ending on Friday. 1 month, dollar-yen implied volatility, which measures the cost of hedging against sharp swings in the yen, was around 10.5% on Monday, falling to get much of a lift-off from Friday's payroll disappointment, and of course far below the 2-year highs of above 13% as recently as August. The dollar was buying 120 yen, up about 0.1%, and of course moving away from the Friday's low of 118.68 yen. This was its lowest since September 7. European equities are expected to open higher on Monday after a weak U.S. employment report that damped expectations. The U.S. Federal Reserve will raise interest rates this year. The latest job data from the U.S. are now focus for global markets on Monday. September's closely watched job report showed that U.S. economy created 142,000 jobs, far below the expected of 203,000. Unemployment rate held at 5.1%, while the participation rate plunged to 62.4%, according to the Labor Department. Many investors are now not expecting the Fed to raise interest rates this year, even though several officials have said in recent weeks that a hike would probably be appropriate before the end of 2015. Expectations for a rate increase fell further after the report was released, with traders pushing the probability out to March 2016. Looking to European shared currency, it was at 1.1233, up 0.2% after it popped to a nearly 2-week high of 1.1319 on Friday. Gold on Monday retained gains on the biggest daily jump nearly 9 months on the week US data. Reverse would happen, of course, over 1186 as we were expecting. However, gold was mostly unchanged, 2.2% higher at 1136 in the Asian session. Also looking at crude oil futures edged up on Monday after Russia said it was ready to meet other producers to discuss the situation in the global oil market, where of course prices have more than halved from the year highs due to a persistent supply glut. A report showing a 5-weekly fall in U.S. oil rig count also underpinned crude prices, although trading was thin with China away on holidays. U.S. crude rose 32 cents to 45.86 a barrel after, of course, settling up 80 cents, buoyed by news that Russia was ready to meet OPEC and, of course, non-OPEC producers for consultations. That's all the important news for today. See you next time. Bye-bye.